Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News website. We've got another of our interviews with executives of junior mining companies. Darwin Green runs HighGold, and they just put out a very impressive news release on their resource in Alaska, over 1 million ounces. 9 grams per ton, stood out to me, thick intersections, easy access. Darwin, thanks a lot for joining us.
Hey, great to be back, Allan.
Well, I'm going to let you run through the highlights because there's a lot more than I just highlighted there from your highlights.
Yeah, I guess we're really pleased with this. It's, we came out with a maiden resource, 43101 resource 2 years ago, and this is an update that includes about 27,000 meters of drilling done over the last 2 seasons. And, we've grown it substantially, and we've been able to maintain very respectable grade, up close to 10 grams. It's gold equivalent, 9.4 grams per ton gold equivalent. So, and, we've crossed over that psychological 1 million ounce threshold. It's all told, if you add the inferred with the indicated, we're at 1.15. So, the endowment there is very healthy, and we're extremely happy with it.
Yeah, and most of it's in the indicated category.
Yeah, that's right. We kind of jumped 2 steps there. We grew it and we went straight to indicated. And that's really in large part due to the fact that, we have such thick mineralization. We can take fairly modest step outs, and you have great continuity as you step out from the known deposit. And with those fairly modest step outs, add a lot of ounces, but ounces that you have high confidence in. So we were able to go straight to indicated with a lot of that. We did convert some of our earlier inferred to indicated, and we've also added some new inferred as we've taken the project along strike and down plunge. It's much more thinly drilled as we step out to the northeast, so we were only able to get that into inferred, and some of it we weren't even able to classify. We didn't have enough density to get it into resource. But as far as the main body goes, which is really where all the where everything happens in terms of economics on the project right now, we're in a place where you can, you need to have indicated to ultimately go to feasibility. So we're already there. We don't have a PEA yet, but it's great to have that high confidence, high grade, and really large endowment of gold. It's all in one spot.
Well, and that ability to convert from inferred to indicated on what you've done at more density speaks highly for the potential to do the same in the inferred step outs.
Yeah, no, that's right. That's right. In fact, we think there's, I can share my screen and show you kind of where the indicated and inferred sits, but 2 seconds here. Get my pointer up. Yeah, you can see from here, this big blob, you can see all the black dots there, that very high density of drilling in this area that's allowed us to get to indicated. And it's a very rigorously done category of indicated, so very high confidence in that. And then as we've been stepping out here, we've been hitting nice mineralization and building out this inferred. Some of these areas, they either are just below cutoff and or didn't have the density to convert even into inferred to classify it. But we think with more density in here, we're going to be able to link all of this up. And more importantly, we think it keeps going. We've got very high grades sitting way out here, 20 grams over 4.3 meters. Not the same monster widths we have in this, but still very attractive grade and widths by any standard. And so lots more potential to keep chasing this way, potential to kind of convert this area into resource and ultimately convert it to indicated. But for now, what we think we have is we've got a really good starting point within the main resource in indicated that we can start doing, engineering and economic analysis on.
Well, a couple things. I was looking at that those 2 blocks of inferred there, and in between them, you only got a couple pierce points. So it looks like there's lots of potential in between those 2. And then converting it, plus the ability to look for more open stuff, because this is a looks like a system that's got lots of legs to it.
Yeah, no, for sure. And we can step further out from that even, and we have like sort of another trend emerging. It hasn't quite got there to get to a resource stage, but yeah, we do see a lot of upside still in this area, and we will continue to focus on growing that. But obviously, we see a lot of potential property-wide as well with other prospects. So, we're going to be a very dual focus now of continuing to grow resources on the property, and that's both by expanding our existing deposit here and ideally finding another deposit or two elsewhere on the property. And we got a good start at DC, but we're also now at stage.
The exploration front, the thickness really blows me away too, and also the ability to get access to that easily. You're not having to go down hundreds of meters to get to the juicy stuff.
No, totally. I mean, and if there was one message for your viewers to take away, it's the massive thicknesses we have of mineralization. Like, in and out of the page here, the true width, the mineable width, if you will, is averages about 40 meters thick within the indicated category. There are other 9 or 10 gram systems, undeveloped gold deposits that are in that sort of million ounces plus or minus range in North America. There's not a lot of them, but there are other ones. Most of them are in the 1 to 4 meter true width, mineable width range. So we're like an order of magnitude thicker. And that's huge when it comes to the actual economics of these projects, because your mining costs go up the narrower your deposit gets, and obviously they go down the thicker it gets. There's less overall development required to get at those ounces. There's more ounces per vertical meter,
less
dilution, and ultimately allows you to do sort of more bulk style underground mining, such as long hole open stope or other. This is subvertically dipping. It's really good geotech. It's a solid silicified body, so it should hang up well. So there's an awful lot to like from the mineability. Like, if you're a mining engineer, this is exactly what you want. You can't do much better from an underground mine standpoint. And add to that, to your point about access, this elevation right here is about valley floor. And so you'd need about 900 meters plus or minus of lateral development to get right into the bottom of the deposit. That's relatively modest amount of development to get right into what is the thickest, highest grade part of the deposit, which will give you very quick payback. So again, a lot to like about that from a mine, potential mine development scenario. And added to that, you would be able to mine your way up. So you'd mine and you'd use gravity as your friend, have an ore pass to drop the ore down. So you're not having to truck your way all the way down on a ramp and out. You just use gravity and pull it out at the bottom. So lots of attributes to this that do make it
So you don't need a network of underground workings to get access to everything.
Yeah. So, ultimately lower overall capital cost and lower overall operating cost. And you've got, a deposit that has got very, very high in situ value, right? The NSR value to this rock, or the gross metal value. Any way you look at it is very rich. So, we're in a situation, the piece that we were missing was size. Our last resource, we had 750,000 ounces gold equivalent in the indicated category. Now we're up over 1 million, 1.05. So it's a significant boost. And certainly, I think, we're at, or certainly very near, that critical size threshold to be, this being something that will work. But obviously, we'd have to do the engineering and the economic study. So our intent right now is to take this and use the metallurgy that we have. Like, the reason we did such detailed metallurgical work, which we released about a month ago, was to really support evaluation of this resource. We had historic data that was very positive, and so we expected good recoveries. We were actually able to enhance that work and look at a few different scenarios that gives us optionality in terms of how we might process the deposit. But the key takeaway is we've got excellent recoveries, for gold, zinc, copper, lead, and we've got very desirable concentrates that we produce. So concentrates that the smelting companies would be very attractive. So you'd have no problem marketing them. Our gold recovery, we got as high as 97% was projected from the work. So, it's That's critically important for these kind of polymetallic deposits, because sometimes metallurgy can be tough. Sometimes you only get half the gold back. Sometimes you get less. So sometimes you got to grind it super, super small, and it's, you know, a very sort of energy intensive, costly processing. This is coarse grind size, conventional flow sheet. So we're able to marry that data, you know, now with this resource, and we're going to be looking at this in-house, you know, looking at sort of some sort of engineering and economic parameters. In the meantime, we will be drilling away this summer, and then probably make a decision, you know, as we roll into the fall, about whether we want to launch on a formal economic study here. Obviously, if we hit it out of the park at Difficult Creek or Milkbone or one of those places, you'd probably put something like that on hold, because everything will change if, you know, those turn into major deposits. But in the meantime, we're in a position that we can start doing that.
It's pretty exciting that if you come in from the side like you are, then you've got those other two zones there right beside where you're getting some of the best grades. And it looks like that continues at a horizontal level.
No, yeah, really good point, Allan. I mean, one of the challenges here is the topography goes up as this goes deeper, and so what that means is we're drilling at their longer holes, and we're hitting it at very poor angles to try and actually connect the mineralization. So we can explore it. We are exploring it. We've been able to expand it. But if you had underground access, it gives you the ability from underground to drill much shorter holes and at much better angles to test this whole panel, because this entire panel is really very attractive, both to the south and to the north. So, you know, it'd be
plus you've got that parallel zone that really is only not a lot of density of drilling at the depth that where you're starting to get the better grades in your known stuff.
Yeah, no, that's right. I mean, we've got a hole here that was 4.5 grams over 11 meters, which is pretty respectable, right? So there's very healthy sniffs. I would say more than sniffs outside and beyond the main resource. So there's lots to go chasing, you know, in this, if you can think of this as a panel, you know, which is, you know, this is a 100-meter grid here, right? So it's a pretty big area. Yeah. And if you get that underground, it gives you a really nice platform to basically try and duplicate what you've seen up here at depth. You know what I mean?
Right? Well, it's a pretty exciting resource, that's for sure. There's not many of them out there like that. I know I'm always looking for them, Darwin, but I think what's equally as exciting is your exploration potential. You're drilling with 2 drill rigs right now?
Yeah, that's right. I'll just flip to that here. I can show you a slide of where we are. We're at Difficult Creek right now. Actually, you know, before going to that, just real quickly, I'll just cover off for you the, you know, you're talking about lateral development. So this is a cut through the mountain. Just to give you a visual for that, you can imagine a portal on the side of the hill coming into the bottom of the deposit, like so, right? So it's, and then you just mine your way out, lots of flat ground on surface. The other thing I was going to show you was this slide. You know, and just a reminder of how this was looked at historically. They looked at direct shipping ore. Westman did, who had an operation down here in northwest British Columbia called the Premier Mine, and they were going to barge their ore to that mill for processing, which meant no mill or anything, no tailings or anything on site at the mine itself, like at Johnson Tract. So that is a scenario one could look at again. You know, there's several other operating mines that are on the coast. And I would have to think what we have now would work under that scenario, to whether, you know, one of these other mill projects that are close by, because the key takeaway here is marine transport is really low cost, right? So, you know, barging 200 miles, 500 miles is like trucking 50 miles, right?
It's also important to ask, you know, what is the difference in the grades that the facilities are processing relative to when this was first looked at? Because like you said, this is a highly in demand concentrate.
Yeah, no, for sure. There's you know, and so, and I'm highlighting these elements just to highlight the fact that there are options. There's a direct shipment type scenario, which I think is a very realistic scenario. We're less in control of our own destiny. You need somebody else to actually want your ore or to buy you out for your ore, so you can add an extra 7 years mine life to their 10 years mine life to their existing operation. But it's a scenario that I think is a realistic scenario, or alternatively, you build a standalone operation yourself. And it's just not all projects have that optionality, especially in Alaska. That's usually thought of as being very remote, but we just aren't that remote. Looking at this picture here, you've got workforce across the inlet. You got oil, Kenai supported all the oil and gas work that was in Cook Inlet here. So it's no stranger to resource development, this region. And where, you're looking at 15-mile road or so to get to the coast, and the project comes with port and road easement rights to support it. So, we're not there yet. And this is all stuff about looking ahead to the future, right? And the optionality.
Yeah, but it's worth considering, because, now you're at the resource stage and it looks like it has the right kind of metallurgy. So, the natural next questions you're starting to deal with.
Yeah, no, exactly right. Exactly right. So, we're going to be doing that, steadily marching away on that, which I consider sort of major de-risk and sort of actual way of kind of capturing value for the project. And then at the same time, we're going to be drilling hard this season. We've got 2 drills up on site right now. They're both turning. They're both right now on our DC prospect. And what we're doing here is we're actually drilling it on a fairly tight grid to start with. We've hit such spectacular mineralization last year, the 6.5 meters of 578 grams per ton gold, 2,000 grams per ton silver.
Wow.
You're not going to get that in every hole, but our objective here.
Well, just to put that into context, here in Mexico, where I live in Zacatecas, there's a lot of big silver mines, okay? And most of those silver mines are looking at 1 to 4 meters of about an average grade of 300 grams of gold, silver per ton. You're a magnitude higher than that, and you're also considerably more significantly thickness, and you've got 577 grams of gold to go along with that.
Yeah, I mean, it was a pretty unbelievable hole, really. But it is surrounded by other holes with really decent grade. So we don't expect to hit that in every hole. Obviously we haven't, but you don't need very many of those to make this very exciting in a hurry. And so what our initial objective here is with this, for the first month of drilling, this sort of tight drill pattern, kind of take a 100-meter grid and just kind of pepper it, is to, one, see what the variability is of the grade within that mineralized zone. Statistically, you need enough penetrations to do it because it's so close to surface. We hit that 40 meters below surface. It's really low cost drilling to get this kind of density and understanding. You wouldn't do it if you're down 300-400 meters, at least at this stage. Also, we really want to understand very well the geometry and the controls on the mineralization. So get enough information, right? It's almost like trying to just map it out in detail with the drilling. And then we can use that as the blueprint with which to go explore a little bit further afield, take larger step outs, and really explore this whole trend between middle difficult, where we've had these great results, and Milkbone over here. So once we're done that tight drilling, we're going to throw 1 drill back over at Milkbone, and we're going to keep, we'll probably keep 1 here for a little while. Ultimately, we're going to have to get 1 back to the main deposit area as well. And then ideally, we will get enough quick enough assay turnaround that we can also then follow up more immediately on results. And one of the things I think I talked to you about before that we've done that's fairly unique is we've built ourselves an on-site prep facility.
Yeah.
So normally, mining companies, they're quite comfortable cutting the core. They, do everything with the core. They'll cut it, they'll bag it, but then they send it off to the lab to get crushed and pulverized and then ultimately assayed. Mine sites will often have their own prep facility. In fact, sometimes they'll have their own assay lab. Typically, exploration companies don't take on the cost and the headache of doing that themselves. But given the brutal service the labs have given over the last 2 years in terms of turnaround time, quite frankly, that's what it is. They just have not been able to deliver. And the bottleneck is prep, the crushing and the pulverizing. So we're taking that on ourselves. We've got very stringent QA/QC protocols to ensure there's, everything's being done right and monitored right. But then what it allows you to do is get right to the front of the queue from an assay standpoint. So you go straight to the analytics, because as I say, that prep, the labs was where the bottleneck was. So all of that is to, to make a long story short, it's supposed to put us in a position so that we can actually follow up on results real time. Last year we drilled this. It was one of our early holes drilled, on the regional prospects. We didn't get the results till the end of September. I think we released them early October, as soon as we could after QA/QCing it. But, basically the drill program was wrapping up. Seasonally, we're pulling our things back from the farther reaches of the project. So we weren't able to follow up last year, which was a real shame, right? You lost momentum. This year, we want to be in a position where we can follow up much quicker and really, I think that investors are going to want to see that. So you're able to be, have something that's more responsive.
And let's face it, Darwin, I would estimate that the bottleneck due to preparation at the labs probably took 80% to 90% of the time that it was taking companies to get turnaround on their assays. So you've narrowed that maybe down to a couple, 3 weeks.
I mean, the labs are telling us under 4 weeks. I mean, I think we can probably get them down to 2, maybe, but we'll see. So I'm not going to overpromise at this point in time, but should bring us back to what we traditionally where we're used to, where you get 6-week turnaround time on a drill hole, which was reasonable, right? You got time to follow up, 4 weeks sometimes. So anyhow, I'm hopeful that we can get some results to the market, sometime the last half of August. We've only just really started drilling here in July. Maybe mid-August, we'll see, but certainly we're going to be in a position where we still have 2.5 months that we can drill once we get these results in and allow us to follow up. We have big success.
That's important, not just for expanding on the DC area, but say you get something that looks like what you're finding at DC over at Milkbone. You got a kilometer or more in between those two hits that you would definitely want to keep following up in that area along the target horizon from Milkbone over to that fault at DC.
Totally. No, you're absolutely right, Allan. And one of the things we found last year is that this mineralization is more subtle than you'd expect with these great grades. It's not, as obvious as you would think. And so getting the results to support what you maybe think is really important. And so, over here, obviously, given we've got the best soil gold in soils of anywhere on the property, we've got our highest grade float sample anywhere on the property. Really, our highest grade surface rock sample is 184 grams, and it's here. We haven't yet found that bedrock source. We assume it's very close by, and we're going to be drilling that. It's covered with overburden. There's a really important structure that's coming through right where this key target horizon, which we've gone through this before.
Those grades that you got above the target horizon are nothing to sneeze at when you consider that those are probably bleeding off of that target horizon.
Completely. No, absolutely. You're right. And what we know, in these types of systems, it's a hybrid between an epithermal and a VMS. There is a certain time stratigraphic interval that seems to be the most permissive for where the gold and best mineralization sits. So at the JT deposit, this is the same, more or less the exact same time and stratigraphy that we see over there. And we're seeing very similar. We see this really intense nodular anhydrite like we see back at the JT deposit. Great gold with base metals. The one thing that's a bit unique is we're seeing a lot more silver over here. I don't know why. Maybe it means we're a little bit higher in the system or getting more silver. So, that might bode well for what's that depth here. We'll see. It's early days, but we really like the similarities that you can see between the other areas, and you shouldn't be surprised to have clustering of deposits. And so I suspect there's a bunch more to be found right now.
Some of your comments remind me of a VMS, and some of them remind me of an epithermal system.
Yeah, no, for sure. It's a weird one, this one, and it's a lot like Hod Maden in Turkey. That was our closest comparable, where it was again, a kind of a bit, what is it type deposit, because it didn't fit perfectly into one category or the other.
Hell of a comparable.
Yeah, yeah. No, it's
Matt, it is a massive project.
yeah, and it's you know, you can look at, I can't remember exactly what it got taken out for, but it's
A lot.
these things are worth some money for sure. So
And
yeah, so we're excited. You know, really looking forward to this. You know, we're just getting just underway. You know, a couple of weeks into it, and things are going well up there. I just got back yesterday, actually, from Alaska, and yeah, excited with the season's program ahead.
yeah, and that target horizon with the drilling that you've received so far suggests that this is a powerful mineralizing system. So I think you've got an exciting one here on your hands, Darwin.
Yeah, I mean, all you got to do is, if you fly around up here, you'll see it. It's alteration zones all over the place, and quartz veins kind of spalling off all over the place. There's a lot going on here. You know, we think we've got some good ideas for how to go about exploring. I'm sure we're gonna, you know, we'll learn some new things this year, but along the way, I'm very optimistic we're gonna have some nice results for the market.
Well, nice results that you can follow up on because of adding that prep lab at your facility.
Yep.
It equally
Yeah.
is exciting.
You know, it wasn't a small job. It was expensive, and you know, it was a lot of coordination to do that when you're up in a camp. You know, this I can show you some pictures of it, but it's we're happy to have it. We think it's worthwhile. And I mean, the irony is, I'm sure by September, given the state of the markets right now, there's a lot of drilling that's going to start winding down, and the assay labs will be getting 2-week turnaround on their own. But
yeah,
so,
but you can't risk that, Darwin,
no.
because you got a shorter season and you got to get at this hard this year. And you know, who knows what the gold could take off tomorrow. You know, it looks like the US dollar is starting to roll over. So, you know, that's positive for gold, silver, and other commodities, copper. And, you know, you can't be too cute. I think this is a very smart strategic move you've made.
Yeah, thanks. You know, I agree. It's yeah, no, it's good. We got a great technical team. We got the right property. We're firing all cylinders right now. We've got the cash in the bank to execute. And, you know, it's obviously it's not a great market. Trying to ignore that right now and just do what we can to build value. Being disciplined about it as well. You know, we are very cognizant about being careful with our dollars in this market. We are blessed with having a very healthy treasury, but
what is that standing at these days, Darwin?
Oh, it's, you know, we're spending it now, so it's maybe 17.5 million, something like that. It's
okay. And most of that money was raised at significantly higher prices.
Yeah, that's right. Yeah, the last financing I think was $1.60 or $1.63, somewhere in that range in November. So yeah, well, what are we trading now? 65 cents, 70 cents, somewhere in that range. So
that gives the investor looking at you now an awfully good valuation to be looking at, considering, you know, all that money came in at much higher prices.
Absolutely. And, you know, you can look at our analyst reports that, you know, they've got, you know, they've done their own DCF models, and they're net on a NAV basis, on a gold equivalent ounce basis. I mean, I generally don't like the kind of dollar per ounce valuation, because, you know, it doesn't account for margin and what separates one project from another.
Right.
High grade, thick deposit should go at a huge premium over low grade, low margin guys. And we are one. And so you know, an investment in high gold today really is backstopped by some real
Even
quality.
if you look at high grade to high grade, if you got a lot of dilution, you should, compared to one with less dilution, you should have a higher price per ounce in the ground. So, you know, however you kind of cut it up, you guys are looking at a cheap valuation just on your resource alone.
Totally. I mean, that's my takeaway. Your investment's backstopped by quality ounces in the ground. Plus, you got exposure to exploration. And you know, I've seen a few stories. You know, it takes something pretty special to move the market these days, but real quality, high grade, thick results will move the market. We've seen that last year. I've seen that with a couple names this year, and this is the exact kind of project that can do that. So you get both. You know, I think it's a good place to be if you're going to be in this space.
Well, Darwin, that's a good place to end it on. I'm going to wrap things up. Did you have any closing comment?
I basically just did. I think we're a great opportunity right now. We're very comfortable in terms of our cash position. We think we have one of the better, if not the best, high-grade gold systems in North America right now, and that's undeveloped. And we're very much focused on advancing it and growing it. And we got a great technical team to execute. So great to have the opportunity to share the story with you again, Allan.
Excellent. Let me close it off and we'll talk at the other end, Darwin. So there you go. With HighGold, you've got a sort of a valuation bottom line with their resource. I think you could make the case easily, due to its high quality and high grade, easy access, that they're undervalued on that alone. The other thing that you have is this exploration potential. Milkbone and DC look like they have the potential to be one consistent zone. It's already hit some very high grades, so there's lots of exploration excitement ahead of them, I think. And I think that you also have to consider that maybe gold is oversold here. The US dollar looks like it's overbought and rolling over, and that should be bullish for gold. So you've got another catalyst there. They've got plenty of catalysts ahead of them, and I think that's going to unlock a lot of shareholder value. So it's a good time to be looking at HighGold. As always, my shows are for information purposes only. It's important for